Hello, I'm Greg DeSisto, an investment consultant with Prime Buchholz. Prime Buchholz is an independently owned and operated investment consulting firm. The last 20 years, we've partnered with the foundation to support the investment committee and staff in determining the investment policy statement, asset allocation targets, and identifying, hiring, and monitoring the managers. This presentation will review calendar 2019 and provide an update for the first quarter of 2020. Around the globe in 2019, the macroeconomic was generally favorable. The upper chart on the right-hand portion of the page, circled in red, shows the GDP growth for the US, the Eurozone, and the emerging markets. Over the course of the year, the developed markets hovered around 2%, while the emerging markets generated higher growth rates. In terms of inflation, we see in 2019, the developed markets hovering just below 2%, while the emerging markets experienced higher levels of inflation. The interest rate environment across the developed markets was accommodative. Looking at the right-hand portion of the page, the United States was at about 2% on the 10-year Treasury at the end of the year, and the Eurozone was actually experiencing negative nominal interest rates. These economic factors translated into strong results for the capital markets. On the far right-hand portion of this chart, you can see the equity returns for the US represented in green and the developed non-US markets represented in yellow. The S&P 500 in the US appreciated by over 30%, while the EFA benchmark representing the developed non-US equity markets appreciated by over 20%. This translated into very strong results for the foundation portfolio. Moving from right to left, we see fixed income generating a positive return, as did the flexible capital. These two components of the portfolio are geared towards diversifying the portfolio and moderating the downside in periods of stress. The international and domestic equities drove the strong results over the course of the year. The yellow bar shows the total fund performance at 22.5%, so an exceptional year. This next chart tracks the asset growth of the foundation portfolio. If we look at the 2004 timeframe, you see portfolio assets at about $116 million, growing substantially over the next 3 years before the 2008-2009 crisis hit. From that point, in 2008, the portfolio was just over $100 million. Over the subsequent decade, through investment performance and cash flows, the portfolio grew to $256 million at the end of 2019, reaching an all-time high. In the first quarter of 2020, conditions changed dramatically due to the impact of the COVID-19 crisis. The S&P 500 went into bear market territory in record time. The upper chart shows the peak to trough decline of 34%, with a modest rebound at the end of March. The bottom chart tracks the volatility of the equity markets in the United States. And here you can see to the far right-hand portion of the page, we hit record levels in the March timeframe. These conditions had a dramatic negative impact on capital markets across the globe. This next chart shows the capital market returns for the first quarter of 2020. On the right-hand portion of the page, the Bloomberg Barclays Index, the investment grade US fixed income component, had modest positive returns. The flexible capital or hedge fund universe declined substantially, but about half of what we saw in the equity markets. The S&P 500 for the full quarter was down 19.5%, with the developed and emerging markets outside the US declining a little more than 20% each. foundation portfolio was not immune to these drawdowns. Although the fixed income and flexible capital components moderated the downside, again, the equity components were the primary drivers of the return for the quarter, with international and domestic equity declining by approximately 20% each. This drove the foundation's return to a negative 16.5%, as illustrated on the left-hand portion of the chart on the yellow bar. For context, the Council on Foundations Community Foundation average for the quarter was negative 18.7%. So while the portfolio declined substantially, it generally outperformed the peer group. This next chart, we revisit the asset growth of the foundation. All the way to the right-hand side of the page, circled in red, we show that peak assets of 2019 at $256 million. The horizontal dashed yellow line shows that at the end of the quarter, the portfolio sat at just under $213 million, effectively moving it back to levels last seen in 2018. The dramatic positive performance of 2019 effectively was wiped away in the first quarter of 2020. A quick update on the April results show the portfolio appreciated by over 8.5%, mitigating some of the losses in the first quarter. Thank you.